Good morning, friends. Team Manager Enabler is back with the video and this time on ITR 7. I know the due date is near and massive changes in the return form is increasing the anxiety for the organizations. So today I will discuss the 5 major and important points that needs to be kept in mind while filing the return form, that is ITR 7, and how can you avoid the possible errors. Before I begin, let me tell you this time a number of schedules and parts of the return form have been cross-linked. Any mismatch anywhere and the error message will pop up. But what one should understand is that it's not only important to mention the same amounts just because they have been linked with each other now, but what's more important is to understand the logic and intention behind such cross-linkage. Let's discuss them one by one. First and foremost, the most important one, Schedule J, where the details of the funds and investments have to be filled. Now you see how wonderfully this schedule has been linked to Schedule I as well as the balance sheet. In Schedule I, you see, you are required to fill the details of amount accumulated under Section 11 subsection 2 during the year as well as for past years. Apart from the amount accumulated, you are also required to give the entire details such as the purpose, balance amount left to be applied, balance amount when it shall be utilized, and many more. Now, as you know, the amount accumulated have to be kept invested in the modes specified under Section 11 subsection 5 of the Act, and the confirmation of it is also required to be given by filling in Schedule I. Same amount needs to be reflected in Schedule J also. The logic and intention behind is to ensure that the amounts so accumulated always remain invested unless utilized. I repeat, the logic and intention behind to keep the amounts in Schedule J and Schedule I same is to ensure that the amount so accumulated always remain invested unless utilized. Now, you move on to part A, balance sheet, where under point number 2 of application of funds, the same investment amount as filled in Schedule J has to be filled here too. Logically, it's correct too, else it might seem that the amount so accumulated has not been kept invested in the modes specified and it might be considered as violation of the exemption provisions. Another catch here is the date of investment that has been asked. If you have any accumulation of past years still lying unutilized, I repeat, if you have any accumulations of past years still lying unutilized, the date of investment should be of that earlier year. I repeat again, if you have any accumulations of past years still lying unutilized, the date of investment should be of that earlier year, because complete withdrawal from such accumulation at any point of time in the year is not allowed till its utilization. So they might be tracing the accumulation with the date of investment and wanting to keep a track of continuity of investment too. So very carefully, both the schedules have to be filled, matching between themselves as well as with the amount disclosed in the balance sheet. Now, in the balance sheet, bank balances and investments under Section 11 subsection 5 have been asked separately. You need to appreciate the fact that even bank balances are one of the modes specified in the said section, but then how the figures will match with Schedule J in those cases where no fixed deposits have been done for the accumulations but kept as bank balances only. In such cases, what we are of the opinion is that the portion of the bank balance which has been kept out of accumulated amount needs to be reported as investments kept in the modes specified under Section 11 subsection 5 instead of cash and bank balances in balance sheet. I repeat, what we are of the opinion is that the portion of the bank balances which has been kept out of the accumulated amount needs to be reported under investments kept in modes specified under Section 11 subsection 5 instead of cash and bank balances in Part A balance sheet. It seems that the entire reporting in the return form is now based on the matching principles, and if the interlinking figures are not matching with their corresponding counterparts, the error message might pop up and litigation might arise in future. See, you have to understand one thing. After everything turning faceless in the income tax, it's the software which is assessing you and not the person. So there is no option of clarifying anything, at least in the initial stages of assessment, till human interface is possible. So it's very essential to fill all the schedules and parts of the return form carefully and avoid any misreporting or mismatch. Then comes Schedule ER and EC, where the application of funds towards revenue expenditure and capital expenditure has to be reported respectively. Here, the most important part is to fill the sources of fund to meet the revenue application and capital expenditure. Don't just fill the amount in row 1, that is the income derived from the property or income earned during the previous year. I repeat, don't just fill the entire amount in row 1, that is the income derived from the property or income earned during the previous year. Why? Because if you have any earlier accumulations or option exercise amount of last year, that needs to be adjusted and disclosed accurately in the relevant row provided to fill those amounts on case-to-case basis, else disallowance might arise at the time of initial assessment itself. Next comes the reporting and disclosure of the amount deemed to be applied, that is, for which the option has been exercised. Earlier in the return form, there was no tracking of such amount and the expenditure made from such funds. This year, a new schedule, Schedule D, has been inserted in ITR 7. This again has been brought in to keep the track of the amount which was considered to be deemed to be applied because of deeming provisions laid down in clause 2 of explanation 1 to section 11 subsection 1. Now, similar to the details of amount accumulated under section 11 subsection 2 which was captured in schedule I, the details of the amount for which option has to be exercised shall also be captured henceforth via schedule D. Basically, what we are of the opinion, even a little scope of escaping from the non-compliance of any provisions is being gradually eliminated by the government. It might seem too much of the disclosures and restrictions, but we would rather put it in this way that whatever gaps were there in ITR 7 till date is being filled by making it more comprehensive and self-explanatory. Another important detail is filling the date of furnishing the audit report, that is Form 10B and Form 9A. Yeah, don't forget to check our videos on Form 10B and Form 9A that has already been uploaded. While the first one can be found in audit information under Part A General, the second information has to be filled in Part B Total Income. Both dates are very important to be filled, as missing such information might either lead to disallowance of exemption or your return might be considered defective. Also remember, if the total receipts of your organization are more than rupees 2,50,000, all the details in the audit information part have to be filled. Lastly, remember to fill the details of all the bank accounts held by the organization. I repeat, all the bank accounts held by the organization. Filling of only main accounts or one or two accounts when you have more might not be sufficient, and any unreported bank accounts linked against your PAN might be considered later as Benami, and other actions might be taken for misreporting or hiding of information in the income tax return. Also, the KYC of all the bank accounts should be updated, and the same should also be validated on the income tax portal. So friends, fill your income tax return for this year very carefully, diligently, and ensure all figures linked with each other but is to be reported in different schedules are cross-verified before the final return is uploaded. I hope after this video, the organizations shall be able to correctly fill the critical portions of the return form and be able to file error-free returns. For more such updates and tutorials, keep tuned to our channel and don't forget to subscribe it. Also, I would request all my subscribers to have a look at our website for more details of services provided by the team Angio Enabler. You can also search any of our video very smoothly on our website by just mentioning certain keywords. For any clarifications, you can drop us an email or comment below. Thank you.